The House just moved forward with a targeted $2,200 stimulus specifically designed for seniors, and processing has officially begun. This isn't another general stimulus package that gets watered down or delayed for months. This is laser-focused on addressing the unique financial pressures hitting older Americans right now, from rising healthcare costs to inflation eating away at fixed incomes. What makes this particularly urgent is the timing. We're seeing seniors struggle more than any other demographic with the current economic landscape, and lawmakers are finally responding with something concrete rather than just talking points. I've been tracking this through multiple congressional sources and budget committee meetings, and the details that just emerged paint a very different picture than what most people expect. Here's what caught me off guard. The payment structure they've designed actually prioritizes the seniors who need it most, but there's a specific window you need to know about to make sure you're not left waiting. Let me walk you through exactly how this works, because the devil is in the details. First, the eligibility is more straightforward than previous programs. You need to be 62 or older, have filed a tax return in either 2023 or 2024, and meet income thresholds that are actually reasonable. $75,000 for individuals, $150,000 for married couples. But here's the key difference. They're using a sliding scale instead of hard cutoffs, so even if you're slightly above those numbers, you might still qualify for a partial payment. The $2,200 isn't arbitrary. Congressional analysis showed that's roughly what seniors are paying extra per year due to inflation on essentials, groceries, utilities, medications, and housing costs. It's designed to be meaningful relief, not just a symbolic gesture. What's particularly smart about this approach is how they calculated that number. They looked at actual spending data from seniors across different income levels and geographic areas. The average senior is spending about $180 more per month on the same basket of goods they bought 2 years ago. Multiply that by 12 months and you get close to that $2,200 figure. It's not perfect for everyone, but it's based on real-world impact rather than political convenience. Now, the timeline is where things get interesting. Processing began this week, but payments are rolling out in 3 distinct phases. Phase 1 covers seniors already receiving Social Security or Medicare benefits. They're getting direct deposits starting January 27th. If you're in this group, you don't need to do anything. The IRS already has your banking information, and the money will hit the same account where your Social Security lands. Phase 2 starts February 10th and covers seniors who filed taxes but aren't receiving federal benefits yet. This includes people who are 62 but haven't claimed Social Security, or those who have other retirement income. You'll get either direct deposit if the IRS has your bank details, or a paper check mailed to your last known address. Phase 3 is the catch-all, beginning February 24th. This covers anyone who might have been missed, including seniors who only filed taxes in 2023, those who recently moved, or anyone whose information needs verification. There's also a portal opening that same day where you can check your status and update details if needed. Here's what most people don't realize. The payment amounts can vary slightly based on your specific situation. The base amount is $2,200, but there are small adjustments for certain circumstances. If you're caring for a spouse with significant medical needs, there's an additional $300. If you live in a high-cost area, defined as places where housing costs are 20% above the national average, you get an extra $200. These adjustments recognize that seniors aren't a monolithic group. Someone living in rural Mississippi faces different financial pressures than someone in San Francisco, and someone managing their own health issues has different needs than someone caring for a spouse with dementia. The legislation tries to account for these realities rather than using a one-size-fits-all approach. The funding mechanism is actually pretty clever. Instead of adding to the deficit, they're redirecting money from underutilized programs and some corporate tax adjustments. It's not taking money away from other seniors or cutting existing benefits. It's essentially closing loopholes and reallocating resources. Specifically, they're pulling from programs that were designed for post-pandemic recovery but never fully utilized, and they're adjusting some tax provisions that primarily benefited large corporations. The total cost is about $68 billion, which sounds enormous until you realize that's less than what the government spends on defense in 2 months. One thing that surprised me during the committee hearings was how much emphasis they put on fraud prevention. They learned from previous stimulus rollouts and built in multiple verification steps. This means the process might take a few extra days, but it also means the money is much less likely to end up in the wrong hands. The verification process includes cross-referencing Social Security records, tax filings, and Medicare enrollment data. If there's any discrepancy, the payment gets flagged for manual review rather than automatically rejected. This is important because seniors often have more complex financial situations. Maybe they moved recently, or their income changed when they retired, or they have unusual tax circumstances. Here's where it gets a bit more complex, though. There are actually 2 different versions of this program moving through Congress right now. The House version I just described is the one that's processing, but the Senate has their own proposal that includes a monthly payment structure instead of a lump sum. The Senate version would give seniors $275 per month for 8 months, which comes out to the same $2,200 total but spreads it over time. Their argument is that monthly payments better match how seniors actually budget and spend money, especially on things like medications and utilities. I've talked to seniors on both sides of this debate. Some prefer the lump sum because it gives them flexibility. Maybe they want to pay down debt, handle a major repair, or just have that financial cushion in their savings account. Others like the monthly approach because it's more predictable and matches their fixed income mindset. The Senate version also includes a slight expansion of the caregiver benefit. Instead of just $300 extra for spousal care, they're proposing $400 for spousal care and $200 for anyone caring for an adult child with disabilities who lives with them. It recognizes that caregiving responsibilities don't always fit traditional patterns. Both chambers are committed to getting something passed, but there might be a brief pause in processing while they reconcile these differences. The good news is that whichever version passes, the total amount stays the same, and anyone who qualifies under the House version will definitely qualify under the Senate version. What's interesting is the political dynamics here. This isn't breaking down along typical party lines. You have Republicans supporting it because their senior constituents are struggling with inflation, and Democrats supporting it because it's targeted relief for a vulnerable population. The main disagreement is really about implementation details rather than whether to do it at all. So here's where we stand. Processing has begun for the $2,200 senior stimulus, with the first payments hitting accounts on January 27th for Social Security and Medicare recipients. If that's you, just watch for the direct deposit. Everyone else falls into the February timeline, with the final phase starting February 24th. The key things to remember: you need to be 62 or older, meet the income requirements, and have filed taxes recently. The money is designed to address the real cost increases seniors are facing, and they've built in adjustments for caregiving situations and high-cost areas. There might be a brief delay if Congress needs to reconcile the lump sum versus monthly payment question, but the commitment to getting this money out is solid from both parties. This isn't getting tangled up in broader political fights. It's focused relief for a specific need. Keep an eye on your regular deposit account if you're in Phase 1, watch your mail if you're in Phase 2, and mark February 24th on your calendar if you think you might need to use the verification portal. One important note about taxes: this payment is structured as a tax credit, which means it won't count as taxable income when you file next year. That's different from some previous stimulus payments, and it means you won't owe taxes on this money or have it affect your Social Security benefits. Also, if you're worried about how this might impact other benefits you receive, like Medicaid, food stamps, or housing assistance, the legislation specifically excludes these payments from asset and income calculations for federal benefit programs. So getting this money won't put your other benefits at risk. For those of you who might be caring for aging parents or grandparents, make sure they know about this. A lot of seniors don't follow political news closely or might miss information about programs they qualify for. Sometimes the people who need help the most are the last to hear about it. I'll keep tracking this as it develops and let you know immediately if anything changes with the timeline or amounts. If this breakdown was helpful, hit the like button so I know you want more detailed coverage of these programs. And definitely subscribe if you want to stay ahead of these financial updates. A lot of this stuff moves fast, and I try to cut through the noise to get you the information that actually matters for your situation.